Hello friends, welcome back. Today is a great day. We are accomplishing our first frequency of 300 videos after 2 years. So since we are frequency operators, I would suggest you go to this if you're following and showing some interest in frequency work. Go to this look up and look at frequency. Look at this video right here. All right, frequency, because we went back 3-4 months and showed you how this is done, and we predict all the price ranges. So yesterday we talked about timing the market. Today we're talking about projecting and predicting the price frequencies. All right, so this is what this is. So make sure you check this out and get used to it, how we can do this, right? So this is what you're looking at right now on the chart. So the plan for today is a quick short video, and first of all, thank you so much for watching these videos and spending some time. Reviewing what we think is a new approach to financial markets. All right, so here it is. So I'm not going to talk how they are built, because those videos explain exactly how you can build it at home. And so this is just the representation of this. When the market opens, we plot this red box, which is the balance point, and we have these frequencies offset from that point, and these are given to us by the market itself, by the vibration of the market. So there will be different frequencies. If I put it on YM and ES, they will have different frequencies, because we're looking at the market generated frequencies. So watch that video, what it means, and what you see is the footprint of the upcoming vibration of the price targets. And what we are doing here is we are applying this with a little bit of adjustment of kind of bar types, I think, along with 2 standard oscillators. As we said, you should always have 1 or 2 or 3 things operating in any market you're trading, which is at a frequency level. We have hundreds of things like these. We just show you a few things, once a while, but the idea is you need to have some kind of an edge in the market. Yesterday we talked about edge based for timing the market. Here we are talking about pricing edge. When they both come together, the price and time merge. We still have one component left. So for that, what we are doing today, we are just sharing this Heikin-Ashi on volume and 1000. So it can be 1000, 2000, 3000. It will just reshape the chart. These are the synthetic average price bars, as you know. So what are we trying to extract from this is wickless bars, if you can find some, at 3 locations: at the extreme frequency points where the cluster of frequency is, or at the balance point, so we can see which side of the balance they are trying to blow out of. All right, so market opens 1600 hours, so goes to frequencies, goes to frequency. You can see they are holding. So you see that? It's funny, and is holding the frequencies, goes up there. All right, it goes up there, comes down to frequency. Now I want to see which side they're going to break. So now it's again early morning, right? So news is coming today, so they'll blow some things today, right? So market opens, takes momentum, All right, so what we are doing this Heikin-Ashi for is looking at the frequency where we are at the frequencies, extreme points. If market is coiling high frequency, it's just trying to expand this range. See, it was just at the lower end of frequency, below the value and the frequencies, right? Small frequency. Now it's trying to extend the frequency ranges, going from a lower bound frequency to higher bound, 3 touches, boom, one more, frequency to the tick, right? Almost to the tick. All right, there we go. So how do we trade this? How do I know I want to get on some specific frequency? Well, this is where we have 2 oscillators. One of them is MFI, money flow index. It has a volume component with momentum component, much better than just pure momentum. Volume drives the market. That's why we took the volume based Heikin-Ashi. So we are averaging 6 bars of volume and representing this. And what are we trying to extract from is wickless bars. That's it. Wickless bars. So when you're in the zone, at extreme frequency points, I want to make a decision, should I go and not go? So here we are saying money is flowing on the top, is moving bullish, volume is moving, momentum is moving. We can see that, right? It's coming off from the low end of it. I'm looking for aggressive buyers in the market showing up, which means the bars should have no wick at the bottom. Right here is the first one. There should be enough strong break bar. So in the balance bar, when it came here inside the balance, so just rotating up and down, it showed aggression. Now there's also market profile timing. First half an hour, hour and a half, 90 minutes, what happens, right? So you need to know those principles. We teach all those in depth. But here it is. We have hit the market profile 80% timing rule, and we are looking for aggression one way or the other. It showed up, this aggressive hand on the bullish side. All right, volume is comprising of a bullish movement. This is simple balance of power. These are indicators which you can find everywhere, right? That's all there is. So what do we do? Stop loss here, buy it at the top of this bar, but the moment is the average bar, so let it buy you, pull you in. There we go. So once we reach the frequencies, we got rejection, went to high frequency. Now aggression was very right, so they try to break these frequencies too. If it had broken this aggressively, it will be going here. So we know all these levels in advance. So knowing this itself is huge, right? Huge. All right, and then this is a simple. I'm not using anything else. I'm not using inside bar things we talk about. I'm not using anything else. I'm not using Mendel. I'm not using any complicated astrophysics models we had. Just simply teaching you the very basic stuff that for Qs we talked about trading in the system, Q system right here, where we trade what, 15 times a year, right? So you can do a simple one directional bias trade only, right? So if you just take one, I'll take long only, 50% of the problems you have will be gone right there. Just take one side only. Don't have to trade 2 sides, right? Who says you have to? There's a natural risk-free rate drift. That's one thing. Second thing is, when you take these longer swing trades, which you hold for a couple of weeks, you can hedge it with bias, delta bias and gamma bias. Again, you have to understand all this, what it means. I'm just throwing these terminologies so you can have a limited risk. I'm putting $2,000 and letting it run for 2-3 weeks, 4 weeks. So in 1 month you will lose, if market doesn't move at all, it stays there statically, you will lose $1,000, right? So how we structure these deals is what it is, and you have absolute control on everything, and you can sleep peacefully, no worries at all. So you can play that tactical game with Qs, it moves, right? Or with anything it moves. So that is a macro level trades, 15 times a year. This is like maybe 10 times a day, micro level. So you need a different kind of frequencies. I'm just showing you one tool, how you can apply this simply, one tool. and this everything else is there in the market, but people don't know how to use the other things, and overbought, oversold. It doesn't work that way, right? They have a way to make these things work. I'm showing you how to put these things together now in a usable systems. All right, there we go. So first time we showed a simple, value area and the bands, and if you watch this video, and this balance imbalance oscillator, that is our innovation. Here we have a frequency innovation, and we are combining this with the standard things everybody has. All right, so here what are we looking at, right? So first of all, I need to enter wickless bar confirmation, and with the bias it is right there. I do a buy limit, boom. If you have robots, activate long only, boom, you're done. Right, 100 points, 10 lots, $20,000, right? But you have, this is what the whole game is. All right, next, once I reach this frequency, I have to make a decision. If I want to see that the sellers have stepped in, what I saw here on the buyer side, if you look at this oscillator, right? Oh, it's overbought. Okay, this is overbought. Look at the volume is just punching and punching and punching. The buyers are still there. Yeah, you have reached the location. This is what happens when this, sometimes it goes precisely, it turns precisely, and then they jam it up right there, right? This is what it is. So what am I looking for? How can I use this? I have a bias. First, where am I? There's no timing module. I'm not showing a timing module here. We can put it together. You'll have timing and price. I'm just trying to make a point with one thing also you can succeed. If the tool has to be superior, not something on retail space. So you can combine with your retail knowledge you have gathered for last 1,000 years. Why not? But in a specific way, right? All right, so this gave me a bias, and this gave me another bias. So there's no reason for me. This is a huge buy. They're trying to break it. I know by looking at this and this, they will not hold these frequencies. This is where the double top, triple tops, people take it. This time they jam it. You can see this, right? They just break it and they jam it very aggressively. All the stop runs are right here, but they reached our frequency points cluster. I see the tails, tails on the top, tails on the top. Sellers are showing up, right? Profit taking is going on. First profit taking here, top, more. Now this is all profit taking on the wicks on the way up. You sell into the momentum high. Professionals, we sell into this. You buy into this, right? No worries, don't have to worry about it. All right, so now I'm looking for some aggressive sales. Why not this one? It's a wick on the top. See that? Wick means wick. It should be totally wickless. All right, so okay, volume is saying, it may be going down. We have the frequencies, but wick is there. I don't have any confirmation. Okay, wait, red bar, no. Spinning tops are coming. This is not the balance bars, right? The bars are shrinking smaller and smaller and smaller. On the top, you can see wicks. Sellers are coming in. So this is an average bar. So last 6 bars. Some sellers are showing up. There's more sellers showing up compared to the bottom. Is wickless. Sellers are showing on the top. At my frequency, I'm making decisions only at the frequency and the balance point, nothing else. I don't want to get in the middle of the thing. All right, so what I'm looking for, that this volume is eventually going to be drying out. First sign is this. Look at this, momentum is going down in this balance of power. Okay, now I'm looking for evidence. The evidence to turn back tide, which is right here. Right here. See this one? Perfect. I should be drawing arrow other way around, but you got it. All right, my friends, what are you gonna do? Right now you can see this whole game of 10 minutes is just huge run up in 10 minutes, crushing everybody who is looking at this double top, triple top, right? All right, so if you had done the apex, you knew it blew the apex on the other side, which is fine. So I need to okay, I missed this trade, whatever, right? Now I'm looking for a reversal. I need to see loss of momentum. You can see the momentum is losing its power. Volume has been there on the overbought side. I need confirmation. This is the first confirmation. Next frequency below, somewhere here, you can put a limit to sell, stop loss initially here, rest is trade management. Goes to frequency. The hitting, this is the power of these frequencies. Okay, you missed that trade too. It comes back to the balance point. Now I want to see how are you exiting this balance point too. Which side are you can stop and blow up on the top again? I'm looking, I'm watching. They attempted to stop. See this one? This buyer stopped, try to stop, push it. Nope. Look at this one. See that? Right here. It came with a very vengeance. The sellers were trying to, buyers were trying to hold it at the bottom. Extreme vengeance, no wicks anywhere. Zoom, very super fast. Aggression of highest quality. No wicks on any side. Red bar. I will not get in the middle. Momentum is already shifted below zero, right? So momentum, all these things, you can use it. Same thing with RSI, below 50, above 50, right? Don't go overbought, oversold. Those things don't work. Divergence or above 50, below 50, all right? That is just one of one. We don't want to talk about retail things. We don't talk about this. I think everybody is so advanced in retail knowledge. It's based on your precious time listening to those words which have been spoken billion times. All right, so aggression, right? Giving me extreme confidence. Not a single wick on the top. Aggression. Here they try to do it. Next, aggression. So if you're trading, if you miss this, here you want to go and do something. Okay, I will do something here because you have some rules, right? Look at this. Another one, opportunity. How you break out of it, right? Same thing here. If you miss this one, how you break out of this balance point is right here. How you break out of it clean without wicks. Break out without clean wicks. Boom. It's not an 8-tick business we are dealing with here, right? It's dealing with something big. You can convert this into 8-tick, 10 ticks, 80. We're talking about 50 points a day, right? 100 points a day, catching the bigger swings for the day. And I think if you can also use MNQ. It doesn't have to be 10 NQs. You can do one MNQ, get started. It's your frequency which has to change. Market is not changing its frequency for you. All right, my friends, so here we are. Back to frequency. What's going on? The collecting, same thing, right, on the top. So is there any other evidence? We saw loss of momentum, double tops, lot of momentum, right? Loss of momentum is only evidence we got, nothing else. This is always saying overbought, right? We say overbought for a long time. It's like any other oscillators. They stay overbought for a long time. All right. Same thing happening here. Now look at this. As I said, these things should be used as divergences or above 50, below 50, right? I mean, this is the view we're offering. So here what's happening here? Holding the frequency levels. Okay. What's happening to volume? Accumulation going on. Sorry about this. Accumulation is going on. Accumulation, right? Gann talked about double tops and triple tops in his write-ups. Double top, triple top in his write-ups, right? And also when the market is, you can just see double top, triple top is then came back again, right? So it is giving you an impression that it is holding. Wow. So when you come here, I said, oh, wow, look at this, very strong level. It's holding 1, 2 times, 3 times. Gann says 4th time they'll blow, and there it is. Right? It's also very common sense. Same thing happened here. Right? When you saw this very strong level, what they do is first thing they blow you out. That's called a hockey stick pattern, and then they go. Right? This is pretty natural if you have been in the market for a while, which I think retail market has been there for 1,000 years. In a collective consciousness, they already know that, right? So the people who are controlling the market, they are putting all these traps, right? All right. So always they will break it and they will fake out and rally. That's the game. So there are 7-8 patterns they play. Don't worry about it. All right, friends. So today we'll not bring the PDF here for timing the market. I think we're done 4-5 times, but so we're talking about something else today, right? A simple thing. Everybody has it. See if that helps you. Why not? Claim your cash. All right. So here, this holding is holding. What am I looking for? Same thing. Extreme. This one will be stop out. Why? Looking at this, right? Stopping frequency is moving up, everything's going good. Same thing happened here, right? Boom, it went straight down. This is the same pattern which showed up wickless right here, this one. Let me put it, let's do it together right here. Where is it? Right here, right? No wick on the bottom. You took the trade, it came, hit you, stop out. No worries. Went here. Now momentum has shifted. This is above 50. It's not coming down. Okay, so I say, okay, no worries, no worries. I look for it again. Same bar got rejected big time by this sellers here. Remember, support becomes resistance. This frequency which was holding here now is rejecting the frequency, right? This is again, as we talk about, break and retest on the other side, right? This is the support, break and retest on the other side, break and retest on the other side. So it flipped. Let me just draw it right here, right? It held, broke, retest on the other side. Got it? Now it's gonna break and retest on the other side. So this happens, it can happen because this was a very super aggressive move down. They don't want to let go. They want to go down to the next level, which is here, the white line. To the tick, it stopped it. To the tick, right? It's not about, wow, we got the tick. No, it's about understanding what they're doing, the games they play, and how we can understand the game. And so this was an official stop loss. So we also know they could have gone down to this here, right? And they tried to rally. When this rally, I was hoping it will rally from here. It did not. The same exact replica of this bar is right here. Let me move it here, right here. Same height, same size, same shape, same location. Boom. They took it out, right? So you have been successful in 1, 2 big huge trades. You lost some small profit and you made double of that. Once you start a campaign, you don't stop. So you're already there, 4 trades. That's what I'm, so maybe we take 6-7 trades a day compared to 15 trades a year. What kind of a frequency trader are you? And then we adjust the timing, the frequency, the targets, the forecasting, the predictions, the market maker. Everything shifts based on the time frame and everything else, right? So okay, all right. And this is a very interesting thing. Obviously, again says 1 time, 2 time, 3rd time, 4th time, be cautious, and they always do this. You can see this in forex market a lot, where they do this break hockey. Think about a hockey stick. I don't know what else can I say about it. Like, you know, it's like a V shape, or you can call it a hockey shape. Let's put it. Oops, this area, right? It's a V shape. V for victory. Let's do this right here. All right, this V shape, right? Always they break it. If they break it slowly, that means they're really drifting down. When they do it very aggressively and come up from a suggestive level which you already have, that is a deliberate stop runs. Okay, and you can look inside the bar. We talked about a lot of things inside the bar. There's so many softwares now. We're looking inside the bar, right? You can do that. No worries. All right, so this happened. we took the profit. So let's assume that whatever we lost here, we recovered here. So we are still very big winner with sitting on one lot, fourth on loss profit. We want more. No worries. We are professionals. We are forced to trade all day long. No worries. 5-6 trades we have to take every day. No worries. All right. So break. All right. So we are very cautious. Always look on the left a little bit. Immediate left. All right. So they collected the contracts. They could have gone up. They did not. This seller right here is sitting. The big seller, biggest bar right here is right here. Let me plot it for you. The biggest seller is sitting right here. There we go. Now if you remember, we did some NQ blasters, higher time frame frequencies, zig 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 zig. Let me see if I can find those videos for you. All right, friends. What is it? NQ blaster, I think it was. So we talked about this algos, right? Algos, when the algos are moving from what you think is supply demand, what we think as professional supply demand is a little bit different. You guys are close, but not really. That's how it is. You can check it out. I think it was last week or so. We posted that video where we showed line chart and there's a zigzags going on. Right, a zigzag. Now this is 6 bars, right? So this is a different if you're trying to locate the algo's balance points, that is the approach you want to take. This is talking about what you guys look at, supply demand. You guys look at the buyers stacked on the one side and sellers stacked on one side, and okay, they were the big buy sellers here, continuous seller, step by step, right? All this order flow software, millions of them out there, right? This is fine. But if you just want to be at we are talking about a stage 1 trader today, not advanced trader, right? Stage 1. See the big bar? There's no wick on either side. Very critical bar. One of the magic thing I just showed you today is this. Came here, expect some rejections. How do we trade this? We show you in level 1 methodologies. All right, so you got some. Now remember, this is average of 6 bars. You can customize it if you like. So okay, that's fine. So this guy cautious about this, cautious about this is the game. And okay, so what happens? They try to get in aggressively. Aggression, and then look at the top, big showing up. Spinning top, changing color. It lost its momentum. This guy is not letting, he's holding it. He want to push it down. Okay, who is he? We don't know. Goldman Sachs, Bank of America, JP Morgan. They trade 10,000 lots. Huge. All right, there we go. War is going on. So we come here, and now we have to remember again, fourth touch is going to be weaker. This guy is not happy. He wants to take the market down. Maybe he wants to buy 10 million Apple shares. Who knows? He's going to push the market down, push the pressure in the NASDAQ market futures and buy and do his business and get out. That's the game. He may have spent $1 billion to go here to buy a couple of $1 billion worth of stocks. All right, I gave you some secret. What happens? Okay, there we go. So as a trader, retail trader, I'm looking at this. I'm cautious. I am looking forward if this is going to become a buyer. I don't see any buyers. See, there's no green bar without the wicks at the bottom. Green without the wicks. I don't see it. I don't see it. And it's the fourth bar. I'm not touching this, even though my frequencies are here. Right? Let it see what happens. It went down. They did V shape. This V shape, I will talk about it some other day quickly, how the MACD and V shapes can be traded for options. We're giving some systems for free now, right? Because you have been great friends for almost 2 years now. All right, thank you so much. There we go. So what am I looking for? This guy, this is a perfect balance bar. Most likely it's gonna twist around. Okay. So once you have this, I'm looking for the bottom, big one. There we go. The first one came here. See that? Boom. They're attempting. These two guys came together. The momentum. These three came together. See that? How much it took for them to destroy this one bar. Fight it off right here. Wickless, wickless, wickless. So this is where, if you see, if you want to go and look at this volume, was oversold. Nice. This is oversold here. Oversold here. Oversold here. Means nothing. Means nothing. In context, it means everything. Money flow index. Understanding what is happening. This reading the raw bars. We are teaching raw bar reading today. I think there are millions of people doing a lot of things, right? We just want to share and add 1 cent for you in your knowledge tools. All right. It hit the frequency again at the end point and did the work. Where it went to? Now we have some additional frequencies showing up. Dynamic frequencies. This is I don't know how to explain this, but there are additional frequencies, and we know these frequencies also. They are a little bit more dynamic frequencies, but they look at, okay, where are they going, right? What is going to ultimately stop these mischievous buyers, these guys? Look at this, right? MFI and momentum, right? So momentums are okay, you know, if you're just chasing it on one side, chasing it is fine. Look at this. So you cannot really take, oh, this is the top, this is the bottom, you know. Again, above 0 is great, below 0 is great, or above 50 or less than 50. But the volume and momentum together, MFI is good indicator. But the way I'm showing you to use it, the way to use it, if you do it blindly, oversold, you will be destroyed. Just like any other retail market indicators. So here it was. Just because a brick wall was created doesn't mean we do this. We do the same thing. We don't break the rules ever. Where's the wick? Less bar right here. Now this makes sense. I am already looking at this volume. Okay, I'm looking for some evidence. Sarah showing up, and he does. Sorry. And this is what it is. And then goes back. So it is, and one thing to notice, it is just rotating across this with the higher ranges with this. Look at this. Across, up and down this red line. They go up the same distance. Look at this roughly, right? So this is where I wanted you to watch that video of frequencies. I spent quite a bit of time explaining how that works. Went back 4 months day by day, and we applied it. So just to check that out. Look at this height. Look at this height. See that? So this is rotating the market in a different fashion. The structures you are not used to seeing. This structure here is same as this structure here. Only the difference is the fractal is different. The fractal frequency is different, but it's the same exact fractal here. It needs a lot of practice, right? So to see these patterns. But I just showed you a simple thing of the balance on both sides is balanced. Right? All right, same thing. If I want to take this balance off the balance, Look at this, right? Roughly, it's giving the same rough ideas to me. What's going on? So this is what we are using in terms of what's going on, and if it was going aggressively down, they're also on the top too. It goes. So anyway, I think we had an extremely long video, 369. So it's time to stop. It is 300th video. This is today is about 300 videos, and it is 36 minutes. So it's time for us to stop the chat about 369. I hope this helps you understand how we can use Heikin-Ashi and volume together and put MFI, which is volume, together with simple one of the professional indicators, which is in our case what we call as frequency target projector. And here it is again, the wickless bar right here. So, and here also another one. Here it's better because momentum is there and volume is moving up. This is also good. Stop loss is here. So I hope this helps, and I hope you can try some experiments with this and see how you feel. And definitely you can reach us at 369 forecast at 369forecast@gmail.com. You can definitely reach us out, and obviously send the questions if you have. Hey, I want to think. What do you think about this? What do you think about that? Right? What do you have here? Why not? So we will talk about some. So I wanted to show you one half an hour I spent with timing tool, how to use it. 30 of tools like these exist. How you want to do price projections is all about energy, natural energy phenomena. Observe it, benefit from it, because they will never change, because this is the natural frequencies of these markets, and they all have different frequencies, and they have 9 frequency each of them. You can combine the frequencies 2 or 3 in a magical squares in a triangular fashion, combine and create composites. You can predict the time and swings years in advance. We can predict 100 years. We can predict 100 years in advance. That's fascinating, right? It takes a different mindset and energy. So we have to become one with the universe first. And it's what intelligence is this? Nothing. It's maybe more intelligent to build these formulas. This is just addressing the natural phenomena and getting in sync with nature. And everybody, all of us can do it, either by taking some help, denoising yourself, thyself, or you can seek out some help, and we are here if we can add any value at your service. Thank you very much for this great question about this, how to trade NQ. Just give you one simplest example, and there are 100 ways of doing it, actually 90 million ways of doing it, because every trader has his own philosophy how to trade, right? We want to trade with the universal philosophy. Keep, as Buddha said, no mind. Thank you so much. Thank you so much.